Hello, everybody. Welcome to Friday. The S&P 500 was down about 0.7% today. And actually, today was a pretty red day, just meaning a vast majority of the pieces that I've seen are down. If you look at a majority of the, Vanguard and iShare and State Street positions, at least in the stock market, most of them are red today. And that's okay. We've had a really good run so far this year. It is somewhat important to take breaks once in a while and have some backfill and let things kind of settle in and maybe get down to a price where people get excited. I've mentioned this before and it's been very accurate so far. When you're in an upward market, the major move is up and the minor move is down. And so today was a, still minor move down, and it comes down far enough generally to excite people to start to buy again. And that's what kind of propels us to the next higher level. And so, at the moment, with just this one day being down, as far as that goes, that's what we'll assume. Uh, but I have something to talk to about today, just in terms of, really kind of a risk management technique. There's a lot of different ways to manage risk. How much bonds you have versus how much stock, what types of bonds versus what types of stock. All of those things are portfolio design components that we can do to try to manage risk. And that's what we do on an ongoing basis. Sometimes we'll ratchet risk up a little bit if we, within a range. We think things are, very positive, or ratchet them down if we think things are more negative, et cetera. But there's another thing called a stop loss. So let me tell you how this works and kind of show you as far as that goes. Let me share my screen. Okay, so this particular chart that we're looking at here is called, Invesco Solar, and it's a company called, the ticker symbol is TAN, T-A-N, and you can see this has had a fantastic run, really, really good. And then here's what happened, with the Georgia election. See this big jump here, and then it really ran again. And I mentioned a couple of videos ago that I felt like clean energy, including this, would have some type of backfill just because it moved up so fast, so much, so quickly. You end up with some type of a backfill. And that's exactly what's happened here today. If you notice, we refilled this gap, which again is quite a common scenario. And when we came down, if you look, here's the support area of volume. And you can kind of see right here this little grouping of shares that was traded, kind of at a similar level. And that's what this is showing out here, is how many shares traded at each level. And so that's okay. I don't have any problem with this particular move, even though, it's down a lot for the day. It's still a normal part of the process. I'm not too concerned about that. But if we take a look at the totality of the run, and including this big jump here, it's time to probably put in some type of other protection measures. So if you see right here, this is what's called a stop loss. And so I've put this in. This program that I'm using is called Think Pipes, and they have a really great way of putting in a stop loss. I can link this into all of our different accounts, and you can see we have 56,000 shares here, for example. And this is just the IRA type accounts in this particular case. And I can put in a stop loss. Now, the beauty of it is I can put a stop loss in based on the chart. And so what I'm really looking at right here is this little grouping of days where things kind of stayed the same, and this grouping of volume. And I'm putting it just below that. And so the idea is if it does come back down through here, it would sell us out of that position. Now, not stop losses don't always work perfectly. There's for a variety of reasons, but it's a great concept in this particular case, because what you see here is there's not a lot of volume all the way back down to here. And so maybe it's better to get out and rest for a while and then figure out what we want to do in this particular case. Uh, but I do have that pretty far away from the top because I like this holding. I want to have a chance to hang in there. You can see it dropped here, for example, before it really took off. So you'd hate to get knocked out right here and then have it run on you. So I do give it plenty of room, but there's a logic to where we're setting it. We're setting it below this little support area here and still trying to give it some room. Because you can see here that, a lot of times it'll run right to the next support. And again, that would be through here all the way down to here. And so that's what a stop loss is. And I'm pretty excited about What that can do for us. We put stop losses in for most of our big positions. Uh, it's different. An IRA, we're going to put those stop losses in a little bit tighter. A non-IRA account, we'd probably put it away farther away because we don't want to generate a bunch of taxable income. But we do want to try to protect some of our profits here. I want to let things run. And if the market continues to go upwards, that's great. Let's keep going. And if the market pulls back really, really sharply or falls apart, then we've got some floor to kind of the risk that we're taking, at least on these positions. So again, no guarantees, but it's part of the process of, kind of managing risk. Which I'm pretty excited about. I think it's a great strategy right now. I don't normally like stop losses, especially in sideways markets, but that's not what we're dealing with here right now. This is pretty much a straight up market, especially in the areas that we're in. And so I think that's something that I hope you appreciate and would love to continue to talk to you about it. But let's see what happens on Monday. I think things are going to be really interesting. Thank you very much.